Ladies and gentlemen, good day and welcome to Marksans Pharma Q3 FY24 conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Binoy Patipal from Elara Securities Private Limited. Thank you, and over to you, sir.
Hi, thank you, Aditya. Very good afternoon to all of you. This is Dr. Binoy Patipal from Elara Securities. I welcome you all to the Q3 FY24 earnings conference call of Marksans Pharma. Today we have with us on the call Mark Saldanha, Founder and Managing Director, and Jitendra Sharma, Chief Financial Officer. I hand over the call to the management for opening remarks. After that, we will have a Q&A session. Over to you, Mark and Jitendra.
Thank you, Dr. Binoy. Welcome everyone, and thank you for joining us in our Q3 and 9-month FY24 earnings conference call. We appreciate your continuous interest and support for the company. I'm delighted to announce yet another robust quarter reflecting our dedication to consistently deliver superior performance and create value for all our stakeholders. Our revenue expanded by 22% year-on-year, primarily driven by the market share expansion and new product launches. We saw consistent improvement in margin profile with an EBITDA margin of 22.7% in Q3, led by operating leverage, consistent cost optimization initiatives, and a reduction in raw material cost. Our net operating cash flow for 9 months stood at 169 crores, driven by an improved EBITDA margin and better collection. Moving on to operational environment, during the quarter we saw improved volume growth across all our key markets, especially from the US. A moderate price erosion of our RX products was observed. Reduction in few key raw materials prices continued compared to the last year, thereby improving our gross margin. However, we experienced a surge in freight expenses due to recent sea route disruptions. We are taking initiatives to ensure that our supply chain remains intact and on track. Talking about our strategic initiatives, the infrastructure expansion from our newly acquired Teva plant is in progress and going at a good pace. We basically had broken this into 2 phases. Phase 1 was to try to achieve over 3.6 billion units per annum. And we believe by next month, March, we will be trending towards that objective. Obviously, phase 2, we anticipate towards the middle or end of next financial year, where we will be targeting over 6 billion tablets per annum. We expect the scale capacity from Teva new facility to cater to the incremental opportunities we see in different geographies. Building on our momentum and in continuation to our last conference call discussion, we have initiated the filing of our first DMF and we plan to file a second DMF within this quarter, which is our step towards backward integration as we continue to strengthen our pipeline. Looking ahead, our priorities remain focused on driving sustainable growth, maintaining balance sheet discipline, and pursuing strategic opportunities that align with our long-term vision. With this, I'd like to turn it over to Jitendra, who will update you on the financial, and then we can start our Q&A.
Thank you, sir. For Q3 of FY24, our operating revenue was at rupees 586 crores, an increase of 22% compared to rupees 479 crores in the same quarter last year. The US and North America was at 257 crores, representing an 18% increase year-on-year. UK and EU formulation markets grew by 34% year-on-year to rupees 251 crores on account of new launches and incremental market share. Australia and New Zealand formulation market recorded revenue of 48.6 crores, and the rest of the world recorded sales of rupees 29.1 crores in Q3 of FY24. Gross profit was at rupees 313 crores, up 30.4% year-on-year. Gross margin increased by 336 basis points from 50.1% to 53.5% in Q3 of FY24. EBITDA for the quarter was at rupees 133 crores, an increase of 73.6% year-on-year, and an increase of 16.8% on quarter-on-quarter basis. EBITDA margin for the quarter was at 22.7%. Improvements in margin is majorly led by reduction in raw material prices compared to last year, operating leverage and cost optimization initiatives. Profit after tax was at rupees 83 crores, an increase of 33.2% year-on-year and decrease of 1.1% on a quarter-on-quarter basis. The decrease in quarter-on-quarter PAT is primarily due to decrease in other income, which is led by the provision of end-to-end loss in foreign exchange. The EPS for the quarter was at rupees 1.84. Talking about 9-month financial performance, for the 9 months of FY24, our operating revenue was at rupees 1,617 crores, an increase of 18.4% compared with rupees 1,366 crores in the same period last year. The US and North America was at rupees 673 crores, representing 15.8% increase year-on-year basis. UK and EU formulation market grew by 26.5% year-on-year to rupees 710 crores. Australia and New Zealand formulation market recorded revenue of 155 crores, an increase of 6.4%. The rest of the world recorded sales of 78.5 crores in the 9 months of FY24. The gross profit for the period was 849 crores, up 23.3% year-on-year. Gross margin increased by 209 basis points from 50.4% to 52.5% in 9 months of FY24. EBITDA for the period was at rupees 348.9 crores, an increase of 51.9% year-on-year. EBITDA margin stood at 21.6%. Profit after tax was at rupees 237.3 crores compared to rupees 182.6 crores in 9 months of FY23, a growth of 29.9%. Growth is attributed to improved EBITDA. However, there is an increase in tax rate in UK from 19% last year to 25% in the current year. EPS for the 9 months was at rupees 5.2. In 9 months of FY24, the net cash from operation is at 169 crores and the free cash flow is at rupees 8.4 crores. The capex incurred during the period was rupees 160.6 crores. The investment is in line with our plan for scaling up acquired manufacturing unit from Teva Pharma in Goa, which will derive our future growth. We spent rupees 29.4 crore in R&D, which amounts to 1.8% of the sales. We continue to remain debt-free and had a total of rupees 688 crores of cash as of 31st December of 2023. With this, I would like to open the floor to question and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Viraj from MoneyGrow India. Please go ahead.
Hi, Mark. Jitendra, congratulations. Fantastic outcome for the quarter. I had a question regarding the FDA facility status of the Goa plant based on the last observation, and also whether all investments for the Teva plant are now complete.
So obviously, based on our last observation, which is we already have a EIR status on. We received the EIR report on that, so that audit was closed. And with regards to the capex for Teva, we have not completed the full capex yet, and it will just spill over to next financial year, the capex.
Okay. My second question is, it looks like you'll do 2,200 odd crores of top line for FY24. Can you guide us towards what is likely to be the targeted top line for FY25, given full ramp up of Teva plant?
So, I would like to give a slightly longer outlook than just 12 months. But obviously, our first target was to cross 2,000 crores, which you rightly said we are trending way above that target of 2,000 crores. We have set out a target to come very close to our next target is 3,000 crores within the next 2 years. So we are working towards trying to achieve that objective.
Right. Okay. All the very best. Congratulations.
Thank you very much.
Thank you. Our next question is from the line of Akshay from Green Portfolio. Please go ahead. Hello, Akshay, sir. The line from Akshay, sir, has been disconnected. Our next question is from the line of Harshit Sharma from MNP Investments. Please go ahead.
Hi, thanks for taking my questions, and congratulations on a good set of results for the quarter, sir. My question is, what is the likely utilization of net cash, and how much is expected to be spent for R&D and CapEx in the coming years?
I think our R&D will trend slightly. Will probably touch 2 and probably cross slightly over 2. In capex, obviously, like I mentioned, we have to complete the capex of what we spoke of, 200 odd crores for the Teva plant, and we have not yet infused that part of the capex to complete, our projects. But we have achieved first objective, and by March, like I said, we should be able to achieve nearly very close to 300 million tablets, which is with a run rate of that is nearly 3.6 billion tablets per annum. So that was our first target that we had set out when we acquired the plant and we started infusing the capex for that plant. So we still have a fair amount of capex to be done in our Teva plant to get it to the second phase. With regards to your first question,
basically the utilization of cash. Definitely we are looking at expanding our presence geographically. We are looking at spreading our business in EU. So we have earmarked some amount for that. And definitely the capex will continue in the next year also. So far as Teva manufacturing facility is concerned, we do plan to have some capex in our US and UK facilities also. So broadly, the amount will be utilized in growth-related revenues in coming years.
Sure, that's helpful. My other question is on the top line, with respect to the US region. Just wanted to understand the drivers for the double-digit increase in sales from the US region. So if you could just help us with that. Thanks.
Yeah, sorry, you wanted to know about the US sales?
So I just wanted to understand the drivers behind the double-digit increase seen from the US region in terms of sales. So, yeah.
Well, it's obviously some new product launches. It is getting more bigger market share, penetrating into the market. Getting some new clients on board. So our product portfolio, besides expanding our product portfolio, we are also getting traction onto our core strength of products, which historically are maturing and growing and getting bigger market share in some retailers. So that's our growth driver in the US. I mean, the US market is huge. This is just the tip of the iceberg. So I think double digits on a low base is the least we could do.
Thank you, sir. I'll get back in the queue for more questions.
Thank you. Our next question is from the line of Tarang Agrawal from Old Bridge Asset Management. Please go ahead.
Hi, good evening. Am I audible?
Yeah, you're audible.
Hi, good evening, guys. Congrats on an extremely strong set of numbers. Just a couple of questions. One, the gross margin levels that we're seeing in Q3, in your view, are they sustainable or there are some one-off advantages that you have right now? Second, if I look at the 9 months that have gone by, Europe on a constant currency basis has done exceedingly well. So is there anything specific that's working in your favor in UK or, it's just a function of market dynamics?
Well, in UK, basically it's a product portfolio, product mix, and new product launches which are driving growth, prima facie out there. It's a matured market for us, so obviously with new product launches, it's relatively easier for us to get market share and market penetration into various accounts. In the gross numbers, I do believe sustainability is a huge possibility. I do believe there is no one-off, so I do believe we should be able to maintain that gross margin part of it.
Okay, and sorry to bring it up again, but I mean, what is the capex number that you're looking at in FY21 and fast forwarding to FY25?
See, Tarang, this is Jitendra here. We have invested 160 crores already in the first 9 months, and I think by the end of March, we should be crossing 200 crores in terms of capex, and this includes the Teva acquisition costs also. We are doing a lot of capex in our other manufacturing facilities also. So I think over a period of 2 years, current year and next year, our overall capex will be between 250 to 300 crores.
You mean FY24 and FY25 together, correct?
Yes.
Okay. Thank you.
Thank you.
Thank you. Our next question is from the line of Nitin Agrawal from DAM Capital. Please go ahead.
Hi, thanks for taking the question. Mark, just sort of going back to the same earlier question around what has really worked for us in Europe this year. Is it largely new product launches or just increased market shares? Or I mean, something, if you have almost like a 30% CAGR growth or 30% YY growth in Europe, in UK this year, and how do you see, we growing from this base in the UK going forward?
So I see a growth being quite robust, Nitin. It will continue being robust in UK for the next couple of years. Again, sheer strength of our product pipeline and product launches that have been planned. We've been filing them for quite some time, so we've been investing on all the filings, everything of that stuff. So obviously, product launches are happening on a quarter-to-quarter basis, and we are able to penetrate. But it's also the product mix which is basically also giving that growth in terms of that specific market. And products that were not able to penetrate into certain accounts we've actually broken into these accounts. So it's a bit of that. Over time you're mature to the level where your service defines your capabilities, and you get better traction into certain accounts with a larger product portfolio than historically what you were holding. So it's a combination of both, which is seeing us gain that market share as well as the revenue generation and the percentage of growth. I do believe in the coming years also we should be able to grow at a very healthy pace, double digits in UK, because of, again, sheer strength of product pipeline.
And Mark, on the product pipeline aspect, I mean, the products that we are launching now, if you can qualitatively give us a sense on I mean, what is the qualitatively, are these more profitable products, more complex products? Any difference in the nature of products that you're looking to file or launch in the coming years versus what you've done in the past?
Yeah, these products are little niche products, high value products, great bottom lines. They will not be driving the top line, but as a basket collectively, the top line will basically will grow. We are planning nearly 34 product new filings in the next 2 years in UK itself. And these are all products where you would see amazing bottom lines being generated. So you will see, while the life cycle of every product is limited, while you may see a price erosion on a product, you will see gains on a B product or on a new product that has just got approved based on, and we have to foresee that, and hence we have gone into into molecules which is more focused on bottom line than top line. But as a basket, I do believe the top line will grow because of the sheer number of products approvals that we're expecting next year and the year after that.
And Mark, if you can just remind us, what is the OTC versus prescription split in UK and in the US right now?
So in UK, our split is around 60-40. So 60 is OTC and 40 is RX, and our US is about 75-25.
Okay. And in the US, earlier we were very strong in pain and cold and cough. Are there any segments where we're looking to incrementally add meaningfully to our portfolio on the OTC side in the US?
Presently, it is onto these. It is basically digestives that we are focusing a lot on. So pain, we are quite exhausted. We are exhaustively covering the pain. So we are launching a few products in the pain too. But our product portfolio expansion is happening more on digestive and cough and cold and allergy. So these are the 3 segments we are still focusing on. And parallelly, obviously, we are working on the prescription front, which is on a slightly different trajectory. But overall, as you can see, the ratio, we are more tilted towards OTC versus prescription.
And in this OTC market for 3 therapies that you're targeting on a going forward basis, how much more space you have to cover in terms of you reaching your target addressable market?
I think we've got a long way for that. So the market size is huge, and I think we are just at the tip of the iceberg for us, and so we are working towards taking larger market share, and we are getting there. We are very, very confident we are getting there.
And if I can take one last one, Mark, on the OTC side in the US, if you can give us some sense on if there have been any meaningful changes in the competitive dynamics in that market. Some of the pricing pressure which we've seen in the prescription side has eased out. How has the competitive dynamics been on the OTC side of the business in US in particular?
It's quite a matured product pipeline, so technically it does not go through that volatility that you see in the RX front, where obviously RX is highly volatile based on demand and supply situation. The OTC is more contract driven for a longer gestation and longer period of time. So we don't experience that. That said and done, we are not immune to it, but we don't experience that type of volatility in the OTC at least.
And in terms of competitive dynamics, have you seen?
No, we've not seen any changes out there.
Okay. Thank you so much.
Thank you. Our next question is from the line of Riddhi Agrawal from ACN Capital. Please go ahead.
Congratulations on a great set of numbers, sir. So I wanted to understand how is the price erosion for Q3 and how is the current market scenario shaping?
So price erosion, like I mentioned in our starting discussion, we have seen some price erosion in the RX front of it, and that's sheer, like I said, the dynamics and the nature of the beast, where demand and supply situation arises. So we are seeing the RX having price erosion. But overall, there has been a bit of stability on the overall basket. So the dynamics is still very healthy, and obviously we are expecting US to be our growth driver in the coming couple of years.
Okay. I also wanted to understand what could be the incremental revenue potential from the acquired Teva Pharma unit in FY25 and FY26 primarily.
So FY25 will be obviously much larger because FY24, 3/4 of the year, I mean, pretty much a year is nearly come to an end, and we have still to hit our objectives. So I think we would see a decent amount of revenue come in FY25. I think we are looking at very close to 600 odd crores of additional revenue coming in from the facility.
Okay. Thank you, sir. I'll join back in the queue.
Thank you.
Thank you. Our next question is from the line of Dr. Bino from Elara Securities Private Limited. Please go ahead, sir.
Hi. Thanks for taking my question. A couple of them. Mark, Australia growth was a little muted this quarter. What's happened there?
Yeah, it is muted, and it's just the timing of approvals and market dynamics out there. So we do plan to be on track in the next financial year, but this year has been a bit subdued, where again it's just been it's just coming out of COVID, and you have a distribution channel which is pretty much flooded. So it's just something of that stuff, that the season in comparison to the historic seasons were not as elusive. So that's where they're pretty much flat or subdued, as you would say. But I believe they'll be back in growth. It is a very small market, so growing is relatively always going to be in single digits where the Australian market is concerned.
Okay. And coming to EBITDA margins, we have seen a huge expansion, which a lot of that, I believe, has come from operating leverage as well. Now that the Teva plant is also started and other plants also have ramped up, is the operating leverage kind of reaching its maximum, or do we have further room to expand margins out of pure operating leverage?
So operating leverage, obviously, like you rightly said, that Teva is not even started to break even per se onto that. So once we start in next financial year with the revenue, where the very visible revenue generation will happen from the Teva plant, and I think operating leverage will get better. Again, so I do believe as and when the plant reaches an X amount of production or output, you will see that operating leverage kicking in much better than what we've seen historically. But for the rest of the plants that we have, I think we are seeing a good amount of operating leverage kicking out there.
Understood. And finally, Jitendra, we have seen a step up in depreciation and amortization charges over the last 2 quarters. Is it primarily because of the Teva plant, and is this the new base, or do you think it will further go up?
Yes, it will be a new base now. So we have started depreciating Teva plant also. So that has resulted in incremental depreciation charge. We have also taken one new warehouse on lease in US. So there also some additional depreciation charge is coming. So I think this 22 crore rupees will become a kind of benchmark for coming quarters also. These amounts will remain.
Understood. Thank you. Thank you very much.
Thanks.
Thank you. Our next question is from the line of Manoj Matthew from Business. Please go ahead.
Hello, Mark, congratulations. Jitendra, congratulations. The freight rates have gone up, understood, but this is also the time when rates are negotiated with your customers for the next year, your end customers. Am I right? Question number one. Question number two, I think as per your previous comments, you said that the fourth quarter of this year will give the maximum results of this year in the Teva plant. So we can expect a better turnover in the fourth quarter. And can you also correct me if I heard that you have taken a new store, cold store space in US, just added a new cold store space in US recently? Is that correct?
Yes, that's correct.
Okay. So the first question, can you answer the first question? That means the freight rates have gone up, but this is also a season of negotiating new contracts with your end customers, January to April.
Yeah. So basically, contracts, obviously no one predicted this freight to go up overnight. And some of these contracts that are being negotiated, they don't happen on a calendar year in the month of Jan. Some of them have concluded in December, November. Some are happening in Feb. And the impact is not yet seen because this freight disruption is happening. It's quite fluid, to put it in the right way. So people anticipate that this will go off. People anticipate that it will come down. So nobody is giving a lot of weightage to it. And obviously we are not seeing the freight prices going up to historic highs that we saw maybe a year back. So it has gone up. It has probably doubled than what it had come down. It had come down way below historic lows. So it has gone up from that angle. But we do anticipate that it will get better. It's not probably going to get worse. Even the Merck liner CEO was on the news on CNN. And he himself said that the prices are not going to go up. He'll be surprised that if he can maintain those prices and it may even start tapering down. So again, once a bit of normalcy comes in, and even if it does not come in, I think this new routing that has just started will, if it is successful, it will be slightly higher, but it will not be, we won't see those heights. Hopefully we won't see those heights that were historic, what the industry witnessed.
Okay. Mark, the next question is, from the Teva plant, can we expect 1,000 crores turnover for FY25? Approx?
You're saying 1,000 crore turnover?
Yeah, from the Teva plant alone?
Yeah, that will we'll probably see it in 26, 27. 1,000 crores, but we would, like I said, I think we are aiming for 600 odd crores next year, in next financial year. But 1,000 crores. So we have two phases that we are, like I mentioned, we are talking of. I think in March we'll be hitting an all-time high, but that's not a great achievement compared to what historically Teva was doing. But in terms of numbers, it shows that we are moving in the forward direction, and we are getting closer to objectives. So for us to hit 1,000 crores, obviously we need to be doing 6+ billion tablets, maybe 6 or 7 billion tablets, per annum. We are still a year and a half away from that.
Okay. Mark, another question to you is, are we still suppliers of Teva? Are we going to continue to supply to Teva in FY25? Or do we end it with FY24?
I think we won't be continuing moving forward in FY25. But again, our contract basically expires, I think, in April of 24.
Okay. So
we have no plans. Right now, we have not shown any plans. Although they are looking for an extension, but we are not inclined to accept that extension because we have our own objectives to achieve.
Okay. And you said you're going in for CapEx in your other plants also. So will that CapEx enhance more productivity, or is it renewal of CapEx to maintain the machines?
Well, we always put CapEx. One is to maintain CGMP, the plant status, but we also put CapEx for optimization to get better output out. To meet our growing demands in each of the countries, we need to invest money to, like I said, to automize and to basically get a bit more efficient performance from the line to hit our objectives out there. So this CapEx into every plant is going to be an ongoing basis. But today our maximum CapEx has been drawn towards Teva to hit 600 million plus.
Okay. So
8 billion tablets required.
Okay. So you have added a new cold store in US recently.
Yeah, I mean a warehouse basically.
Warehouse. Okay. Thank you, Mark. Thank you. And congratulations again.
Thank you.
Thank you. The next question is from the line of Hiral from Kalpurus Capital. Please go ahead.
And Jitendra, congratulations for the great set of numbers and the consistency which I'm seeing for the last 2 years, which we are maintaining quarter-on-quarter basis. I had a couple of questions. Some of them are already answered earlier. Just for the couple of clarity, on the Red Sea costing perspective, as you mentioned that it has, in some of the contract, it has already been covered. But just to understand the impact on the margin perspective, will it be a kind of a 50 or 100 basis point impact on the margin or even less than that?
It will be very less than that. It's very less than that. And it's not covered in any contracts because this is something which is war related or something which is beyond everyone's control. So, I mean, it is there today, it may not be there tomorrow. So I think, we don't anticipate that impact like what we historically saw maybe a year back or 2 years back. We don't anticipate that.
Great. And on the PAT margin, where we got some impact due to Forex, I think that was one of the kind for that specific quarter, or it can spill over to 1 or 2 more quarters?
No, that is one of only. It won't spill over to... Yeah, see, it is difficult to comment. It is foreign exchange at the end of the day. It may keep fluctuating, but we don't think it will be this is one of kind of number.
Great. Thank you. That clarifies. And all the best for the future quarters and the great result ahead. All the best.
Thank you.
Just one thing, as a investor would like to mention that if possible, we would like to attend the plant visit for the Goa plant when it's ready for it.
Okay, will do.
Sure. Thank you.
Thank you. Our next question is from the line of Akshay from Green Portfolio. Please go ahead.
Yeah, good evening. So my question was related to new product launches and whether they were in the pain management segment or any other segments.
They are in all the segments. That some of them are in, mainly in digestive, mainly in cold, very few in pain, some in prescription, in antidepressant categories. So it's a wide portfolio. It's a large portfolio.
Okay, thank you.
Thank you. Our next question is from the line of Viraj from MoneyGrow India. Please go ahead.
Hi, Mark. Viraj here again. You had mentioned about a year ago regarding free cash flow allocation, saying 1/3 you had a board policy, 1/3 to be allocated between dividends and buyback. Assuming you haven't done a buyback or you may not do a buyback, can we at least see a higher dividend this year?
Again, we have to take a call whether there may be a buyback or a dividend or it's going to be split into this, but like I said, 25% of our free cash flow will be divided into dividend. It may be fully dividend, it may be 3/4 dividend, 25% buyback, or maybe 100% dividend, or we have to just take a call on that.
Okay. And any update on your new acquisition and where you are on that? It's been going on for...
It's still in progress and we are still in dialogue, but nothing concrete, so we would not want to mention anything much today, because we still are far away from pen to paper.
Okay. All right. All the best.
Thank you.
Thank you. Our next question is from the line of Shanmug, an individual investor. Please go ahead.
Yeah, sir. Am I audible?
Yes, sir.
Yes, you're audible.
So, thanks for the opportunity. I have a couple of questions. So, first, if I touch upon EBITDA, I clearly understood from the earlier questions. Is it possible to split that 2% improvement from raw material and operating levels?
I could not get you. It is all jarring.
Your voice is not clear.
Hello? Am I audible?
Yes, you're audible.
Yeah. I will repeat my question, sir. It's regarding EBITDA question.
Yes.
There is an improvement, good improvement from 21% to 23%.
Yeah.
Can you split that into, how much comes from raw material reduction and how much from operating leverage?
The substantial part of it has come from the raw material side of it. So I can say almost 2/3 is coming from the raw material side of it, and the balance is coming from the operating leverage.
Great, sir. So I hope that raw material reduction is going forward also will have an impact positively, considering the freight cost increment. Am I right, sir?
Sorry, we can't understand anything out there. So we can get bits and pieces, but we can't understand the question.
I'll repeat, sir. I hope that raw material reduction will continue in the coming quarters.
We all hope so, and we always continue for better pricing. We are always seeking for better pricing, and it is looking much more stable. And there may be a possibility, but it's too early to say that.
Oh, thank you, sir. Good. And finally, if you look at the consistency for the past 2-3 years, final quarter would be a challenging one. The revenue would be a flat, more or less. So, not considering Seva plan, do you see growth in this final quarter in this year, sir?
Yeah, well, we are growing, so I think the numbers speak for ourselves. So we are growing and we'll continue to grow. So we look at it from a long-term outlook more than on a daily basis.
Okay. So this Seva plant has been commenced or yet to commence? Will commence in this quarter?
No, it has commenced, but the growth of volume, the volume growth has yet to translate. And we probably see March being the first month where we'll come close to hitting our first phase of objectives, and then obviously we have to keep pushing towards reaching our main objectives.
So since it's a new plant, do we see any impact on EBITDA, sir? There might be some.
Well, these have all been factored in a performance presently, so I don't see that much of a difference.
Thank you. So last, if I touch upon that one question on other income, I understand that there is a entry regarding the forex, journal entry. Do we see any reversal in going forward? It's one time, it's permanent.
See, we believe this should be a one-time kind of situation here.
One time, is it going to reversal, sir, or it's a permanent entry?
Yeah, it depends on the foreign exchange levels, which will be there now as on 31st March. So, difficult to comment, but I don't see any incremental mark to market. Let's see what happens as on 31st March. So it will get revalued again as on 31st March. So we will come to know at that time only what is the situation. But then, in Q3, the MTM loss should be a one-off kind of thing.
Sorry, sir? Q3?
We don't see that kind of volatility in foreign exchange. See the GBP, basically it has come from the GBP side, wherein between September to December, GBP fluctuated between rupees 101 to 106. Now it has become a bit stabilized between 104 and 105. So we don't see any more volatility here. But anyway, it will depend on the levels which are there at 31st of March.
So that's all that is. Thank you, sir. Thanks for the understanding.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask question. Our next question is from the line of Anand, an individual investor. Please go ahead.
Yeah, good afternoon, Mark. Congratulations on a good set of numbers. This question has been answered probably, but I want a slightly different perspective on this. My understanding on the Teva facility was a total of 200 crores will be spent on this. This includes the upfront payment, the acquisition cost, and the upgradation to basically double the capacity from $8 billion to $15-16 billion. Now, out of this 200 crores, 160 has been spent. So am I right in saying that we need to spend additional 40 crores to reach that capacity of double?
No. So I'll just like to clarify that one. So 160 crores has been spent for globally for all our plants. It's not spent on Teva plant. So I think our Teva acquisition plant for the Teva we must have spent around 85 to 90 crores.
Right.
So we still have some amount of capex to be spent out there. Number one. Number two, I don't think I've ever mentioned 15 billion tablets because that's not possible from us. Overall, okay. But from a single plant, from Teva plant, it's not going to happen 16 billion. Yeah, 8 billion tablets is what we are targeting from the Teva plant. And today, like I mentioned in the opening statement, that we should be trending at from March, we should be trending on our first phase to hit trending at 3.6 billion, and hopefully next financial year we will get closer to the 8 billion target.
So
by the end of next year.
No, thanks for the clarification, Mark. Just to follow up on this, the products coming out of the Teva facility, will this command a similar level of premium and margins compared to our existing facility? Are these approved for sale in US or no?
Yes, it will, because it's again from we supply all to regulated markets, so it will have the same premium that. But it's important to understand that you will see a better. It's not about obviously rooming numbers is very critical because with numbers you'll have operating leverage kicking in.
Right.
So basically we are working hard towards trying to hit those objectives as fast as possible.
Right. No, thanks. Appreciate that clarification. And one last question. Can you give some color regarding our overall margins on our business in US compared to the UK?
UK is a much more matured market in terms of, we've been in the UK market since 2008. So the operating leverage, the amount of product portfolio is huge. The operating leverage is already there. Market penetration is there. For us, US market is relatively very new. We've been there, actively from 2017, although we acquired the company towards the mid and late of 2015. But we've actively been promoting our products only from 2017. So it's not even 5 years. So we've got a long way to go. And as and when our revenue keeps rising, the operating leverage will kick in and profitability will be much better and visible during the coming years. As you can see, this year is better than the previous year, and next year will be better than this year.
Okay. Right. Thanks, Mark.
Thank you.
Thank you. Our next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Hi. Thank you for the opportunity. Majority of my questions have been answered, but just a quick question on we were venturing into complex molecules like adult dual action. So if you can give some color on that, how are we progressing on that, or do we expect a meaningful contribution, or maybe some color on the margins? So what kind of expectations can we have from these complex molecules?
So dual action is only one of the many molecules that we filed in. We are still expecting many more approvals to come in on similar grounds, which are more complex in terms of extended release or bilayered or MOPS technology type of molecules. So we do see those giving cumulatively, it will be much better when all the products come in. From a dual action, we have not seen any price erosion per se, but we are working towards getting contracts and growing those molecules. So it's too early. We've just been not even a year with this molecule in the market right now.
Understood. And just one bookkeeping question. Last year we had a effective tax rate of around 21%, and this year I guess we are looking at around 27 or 26%. So going forward, do we expect it to be in the same range, 25-26%?
Yes, it will remain at 25% because the tax rates in UK has gone up from 19 to 25%. So now I think going forward, our effective tax rate should be in the range of 24-25%.
Understood. Thank you.
Thank you.
Thank you. Our next question is from the line of Rohan from Brit Capital. Please go ahead.
Yeah, so thanks for the opportunity and congrats on a good set of numbers. So my question is on Teva. We said that next year we are targeting around 600 crores of revenue. Is that incremental revenue on our base, or is that that we are supplying from some other sources and we would switch that to the Teva facility?
So Ron, this will be mainly incremental. It may not be fully incremental, but mainly incremental growth that will come in from there. Because obviously it will cater to a larger product basket and various geographies. So I would assume it will be mainly incremental growth coming from there.
In terms of utilizing that facility, our facility would come up say March, April, but a lot of your contracts are signed end of the year for the next year. So can you expect the ramp up immediately as the facility is operational, or we'll have to wait for some time and sign contracts and really see the utilization in say calendar year 25?
Again, a very good question, but we will basically see, we can't take contracts without having that capacity in hand. So when we are taking contracts, right now we are taking contracts worth, you can see a visibility of 3.6 billion units coming in. When we scale it up to 8 billion, 600 million or 8 billion trending towards 8 billion units, we have to obviously expand and get contracts in place, support that. But there will be some spillover in terms of optimization. And that's why we are not saying that we will do 1,000 crores, 800 crores or 1,000 crores next year. We do believe in the following year we will be hitting those objectives.
Got it. So the contract you've already signed, you've assumed this capacity to come up, and based on that you've signed contracts. So you already have that visibility. Is that understanding correct?
Yeah, that's understandable. That's accurate. And basically we only take contracts what we can deliver. We don't.
Got it, sir. Thank you and all the best.
Thank you very much.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask question. As there are no further questions from the participants, I now hand the conference over to management for the closing comments.
I'd like to thank all of you all for participating in this call. Have a great evening and be safe. Thank you very much.
Thank you very much.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.